Good day and welcome back. My name is Mokwati Ramphisa, the CEO of Lebowa Management, as part of Money Smart Week South Africa 2025. So today we're not going to discuss anything too much depth. We're just going to discuss funeral insurance. We all know it's straightforward. We purchase quite a lot of it, but I guess that's why we're having this talk today, that we purchase quite a lot of funeral products. So here on my talking points, I've got about three things that we're going to discuss, but the foremost important one is discussing the impact of funerals on breadwinners. In so many cases, when we engage with clients, they'll tell you that they've got financial products, but once you do the actual servicing of clients portfolios, you realize that a lot of clients only have funeral products. But of course, you also do realize that the reason why they have a lot of funeral products is because a lot of people are dependent on them, not just their immediate family but extended family. But the challenge is it sometimes comes at an opportunity cost, because you find that a client has premiums worth 1,500 to 2,500 that are directed exclusively to funeral policies, and none of those clients have life policies. So in some cases you might not be sure if it's the high dependency on this breadwinners, or there's just a lack of literacy on it. So let me educate you a bit. There's a huge difference between a life policy and a funeral policy. A funeral policy is meant for immediate expenses when someone or your loved one dies, and you're able to take care of those costs as and when. And usually insurers are supposed to pay within 48 hours. So in most cases you'll get a maximum of 100,000 per life assured. So make sure that you're not underinsured or over insured with life policies. With funeral insurance, pardon me. So in most cases, this your expectation will be 48 hours, within 48 hours payment of your benefit, and the maximum per life assured, especially at inception of a funeral policy, is 100,000 rands. And then when coming to life policies are essentially going to replace your income. Not just going to replace your income, but they're going to pay for your debts. They're going to educate your kids in the future. So it's important that you differentiate between funeral policies and life policies, because life policies, in most cases, you have a minimum cover amount of 100,000, and the maximum will depend on your insurable interest. In the previous session, we spoke about estate planning, and in most cases, both the life insurance and funeral insurance do play a huge role in executing a proper estate plan. So in your will, usually when we assist you, we'll help you calculate what we call a liquidity analysis. We want to understand, if something was to happen to you today, if you were to drop dead today now, how much will be liable in your estate? How much would your family need in order for it to survive till kingdom come, right? So now when we do that calculation, it's able to give you an understanding of how much cash you need, and not so many people have cash readily available, right? So how do we get that cash? If say there's 1.5 million rands, that is as part of your liquidity analysis, that might need to be liquidated, or might need to be there in order for it to provide for your estate costs and everything else, then you'll need a life policy in that regard. So that's where a life policy will come in handy. And please get this, we're not saying don't get a funeral policy, we just say diversify your financial portfolio accordingly. Know where funeral policies are going to work, and know when life policies kick in. And in most cases, life policies are there as part of your protecting your wealth as a whole, so that people of interest can't take your assets or can't take things away from the people that you love. Thank you.